In this video, let's talk about items that would not be deductible for a trade or business. And as we see here, we're still in Code Section 162 in the Internal Revenue Code. Section 162 is what determines what is deductible for a trade or business. Now I'm looking here at Section F, fines and penalties, other amounts. These are things that would not be deductible in a trade or business. Examples of such would be things like parking tickets, fines, penalties, EPA violations, any type of legal issue, etc. All right, so in that case right there, a fine or penalty or another law violation, both federal and state. So let me go ahead and annotate that here. Federal and state is likely not going to be deductible. All right. Personal expenses. All right, we talked about this in the last video, but it's important to bring it up here because things like personal use of assets. If you buy your child a car, that doesn't have a business purpose. Okay, so if it's something that is clearly for the use outside of work, or for a family member, or a friend, or a loved one, those would likely be gifts, and they are not going to be business expenses. So those are not deductible. All right, so that one's fairly self-explanatory here. If you have expenses that are related to tax-exempt income, so tax-exempt income, let's see, things like municipal bonds. All right, so municipal bonds, we know that those aren't taxable to the Fed. All right, so you get a tax break there. So any expenses that you use in generating that income is not deductible. So if you get the break on paying taxes on it, you're not paying income taxes on the proceeds from these bonds. You do not get to deduct the expenses in that. So that's just an example there. But again, expenses related to tax exempt income, can't deduct it. Bribes or kickbacks. Now, there's some weird rules on this. In general, though, let's say that if you bribe somebody or establish a kickback, if you do some sort of, let's say you buy X amount of my product and then I send you back, an off the books amount of, I don't know, $1,000 to make this deal go through. Or we could have a situation where I sell you inventory and then you just simply sell it back to me in the next year. Things of that nature, those are going to fall into non-deductible expenses and they can get you in a lot of trouble. So pretty self-explanatory into bribes and kickbacks as well. Lobbying and political expenditures. A lot of people think that these are deductible and they are not. So anything that you do to sway, public, I'm not going to say public opinion here. Let's say you're attempting to sway some sort of governing body, all right, a senator, a congressperson, be it state or federal, any of those expenses are not going to be deductible. So, we go back to the big ones here. Parking tickets, you're buying inventory and you end up getting a parking ticket. That parking ticket, unfortunately, not going to be deductible. So can't deduct that. Let's say, all right, here's a good one. All right, this one comes up sometimes. You got a taxpayer that's got clients in multiple states. All right, and they've got a guarantee. All right, well, you know what? Let's make this even easier. You got a pizza delivery company. Their guarantee is we get our pizza to you in 30 minutes or it's free. A delivery driver gets busted speeding in a residential area. All right, but they still made it under their 30 minutes. They've completed their obligations to their customer, but now they've got a $250 fine. All right, so speeding ticket for $250. Speeding ticket, $250. But because they were actually trying to satisfy their customer, this is just a cost of doing business, right? Incorrect. Nope, you cannot deduct that 250 right there. That is not deductible. You've got to eat that one. Fun fact, if you're looking at financial accounting and we're going back to our GAAP basis accounting records, you do deduct fines and fees and penalties there. But for federal taxation purposes, you do not get a deduction for that. Let's think of another common one here that we see in practice a lot. A taxpayer will oftentimes use a home office and will attempt to, at times, so we'll say a home office, to buy an extravagant or lavish entertainment system or television, perhaps buy some video game consoles or maybe a kegerator. I don't know. All right, so the list is fairly limitless here, right? So if you go to the original video here where we look at it, is something reasonable? Is it ordinary? Is it necessary? Does it have a business purpose? We need to look at that here too. So if something looks like it's personal and it's really just generating personal benefit, it likely is, and it's safe, better to be safe than sorry, that's a personal deduction and you cannot deduct it. So again, this is a very short list. If we go back to code section 162, we'll see that there's probably hundreds of different things here. I'm just simply scrolling through here to show you that the list is cumbersome. You do not need to memorize each and every one of these, but the Internal Revenue Code is fairly inclusive of things that they will not allow you a deduction for. So if you're ever bored and you'd like a quick, well, I won't say quick, but if you'd like a nice read that might put you to sleep at nighttime if you're having trouble sleeping, I recommend code section 162. It's a great read. All right, so that is things that are not deductible, and that's it for this video.